Every billion-dollar company out there starts with a pretty simple idea. But how does that one idea actually survive and become a unicorn? Well, we're going to break down the founder's playbook, from that first moment of frustration all the way to finding the holy grail product-market fit. So let's get right into it.
This quote, right? It just sets the stage perfectly. True innovation isn't about just giving people what they say they want. It's about understanding their problems so deeply that you can build the solution they haven't even thought of yet. And that, right there, is the first huge challenge every founder has to face.
So, where does this whole journey even begin? Well, it's not with a solution. It starts with a problem. The best startups, the ones that really take off, solve problems that are so urgent, so painful, that customers feel like their hair is literally on fire. They're not just a little annoyed, they are desperately searching for a fire extinguisher.
Let's take Linktree as a perfect example. The founders, they ran a marketing agency, and they were just constantly frustrated by having to update that single, lonely link in their clients' Instagram bios. I mean, imagine it. For every new song, every tour date, it was this tedious, manual chore. That was their hair on fire moment.
The famous VC firm Sequoia Capital, they actually call this the first archetype of a great company, a hair on fire problem. The need is super urgent, the demand is obvious, but that also usually means the market is pretty crowded. So, to win here, you can't just be a little bit better. You have to be fundamentally different. Okay, so the second archetype is what they call the hard fact. This is a pain point that customers have just sort of accepted as a fact of life. It is what it is. The biggest challenge here isn't even solving the problem. It's shaking people out of their old habits and proving a better way actually exists.
And finally, you've got the future vision. This is about creating a whole new reality that kind of seems like science fiction. Think about the first iPhone. The biggest hurdle wasn't solving a problem people knew they had, it was overcoming this widespread disbelief that your solution was even possible in the first place.
So, you've identified what you think is a hair-on-fire problem. Great, but are you the only one who has it? The next phase is all about validation. You have to prove that other people feel this exact same pain and, crucially, that they're willing to open their wallets for a solution.
Now, finding your first clients isn't magic. It's a methodical process. It all starts with just talking to people, doing interviews to confirm the problem is real. That intel then shapes a super-focused MVP. And this part is critical. You have to figure out who you're selling to, because the person who uses the product, the person who buys it, and the ideal company profile might be three totally different things. Only then do you build your target list and start reaching out.
In these interviews, you have to remember, you're not a salesperson, you're a detective. Your whole goal is to dig deeper than just surface-level answers to find the real, true cost and urgency of this problem. You need to find out who controls the budget and exactly what they are losing, whether it's time or cold hard cash, by not solving it.
But here's a word of caution about the MVP, the minimum viable product. So many founders misuse this idea and just rush out a buggy, incomplete piece of software. The whole point isn't that it's minimum, it's that it's focused. A great MVP has to solve one core problem perfectly to create real value and build trust right from day one.
Okay, once you've got a valuable MVP and your first users are on board, the race is on. You're now chasing that pivotal moment every single startup dreams of, product-market fit. This is the point where you've finally built something that the market genuinely wants and needs.
So what does that actually mean? Let's be real, that definition is a bit of a mouthful. In simple terms, product-market fit is when demand is so strong that you can actually spend money on things like marketing and get a good return. It's the universe giving you a green light that says, hey, this is working. It's time to hit the gas.
That's the million-dollar question, right? It's not just a gut feeling. You can't just guess that you're there. You need real, cold, hard data to tell you whether you've truly hit the mark. So how do you actually measure it?
Well, here's a super powerful indicator. It's called the Shotnellis test. You ask your users one simple question. How would you feel if you could no longer use this product? If 40% or more of them say they would be very disappointed, you've got a very strong signal that you found product-market fit.
But for a more complete picture, you've got the pirate metrics. Think of this like the dashboard for your business's health. It tracks the entire customer journey, from how they first find you, to whether they pay you, and maybe most importantly, whether they tell their friends. It helps you pinpoint exactly where your funnel is strong and where it's leaking.
Now, once you have achieved product-market fit, the whole game changes. The focus shifts from just finding what works to building a scalable, self-sustaining growth engine.
This is where you create what's called a flywheel, something that just powers the company forward, seemingly on its own.
And Linktree is an absolute masterclass in this. Their growth was completely viral, built on this beautifully simple loop. A user signs up, puts the link in their bio, then their followers click it, they see how useful it is, and they see a little prompt to create their own. So every new user becomes a free advertisement, organically pulling in the next wave of users. It's brilliant.
But that viral loop wasn't their only trick. They gave away a ton of value with a freemium model and a really powerful analytics dashboard. And most importantly, they really listened to their users. They used feedback to prioritize what to build next and just iterated incredibly fast.
Okay, this all sounds like a perfect success story, doesn't it? Massive growth, a unicorn valuation. But that doesn't really tell the whole story. We've got to hit pause here for a critical reality check because that kind of growth, well, it often comes at a very, very high cost. So check this out. For its first 4 years, Linktree was bootstrapped. They were actually cash flow positive. But starting in late 2020, they strapped themselves to a VC rocket ship, raising over $165 million in just 18 months, which shot their valuation up to $1.2 billion. But here's the other side of that coin. While the revenue grew to an impressive $25 million, their losses ballooned to $50 million. Let that sink in. For every single dollar they were making, they were spending $2. That hypergrowth was fueled by burning an enormous pile of cash.
And this did not go unnoticed. According to industry insiders, that level of spending was just really inefficient. Yes, it was growth, but it was incredibly expensive growth, way below the normal benchmarks you'd expect for a healthy, scalable business.
And this all brings us to our final and maybe most crucial question. In a world that is obsessed with unicorns and venture capital, we really have to ask, is exponential growth at any cost really the ultimate goal? Or is the path to a truly durable, successful company something a little more nuanced? It's a question every founder, investor, and employee should probably be thinking about. Thanks for tuning in.